Hello everyone, and welcome back to Explain the Charts. Today, August 14th, 2025, we're taking an in-depth look at the Australian dollar versus the US dollar, AUDUSD, analyzing both the latest news and the underlying chart data. First, let's address some recent macroeconomic headlines shaping the market landscape for AUDUSD. We've seen conflicting reports regarding U.S. inflation, with a significant 0.9% rise in the Producer Price Index for July, while President Trump claims inflation is down to a perfect number with hardly any inflation at all. This divergence creates considerable uncertainty about the Federal Reserve's potential monetary policy moves, directly influencing the U.S. dollar's strength. On the Australian side, recent news highlights solid jobs data, which previously provided a strong impetus, helping to lift the Australian dollar to a two-week high, nearing the 0.656 mark. Such positive domestic economic indicators usually provide a foundational boost for the Aussie currency, reflecting underlying economic resilience. Globally, markets have shown mixed momentum, with various commodity and currency pairs exhibiting divergent moves, making a clear directional bias challenging without deeper analysis. Now, let's switch our focus to the charts themselves, starting with the daily time frame to get a broader perspective on AUDUSD's long-term behavior. Looking at the daily chart, we can clearly see a notable downtrend that initiated around September 2024, where the pair peaked near the significant 0.690 level. Following this peak, we observed two very sharp declines, one in early October 2024, seeing a nearly 3% drop, and another substantial fall of 4.5% in early April 2025. These major drops established critical long-term support levels, particularly around the 0.60 to 0.61 area, which acted as a resilient floor after the alarming April 2025 plunge. Despite these severe downturns, a gradual recovery began in May 2025, and the pair has been slowly grinding its way upwards, forming what appears to be a nascent short-term bullish channel. The recent strength, as evidenced by the August 13th candle closing robustly at 0.65506, directly correlates with reports of positive Australian jobs data and suggests a continued effort to reclaim higher ground. However, overcoming the formidable resistance levels established by prior highs will be absolutely crucial for this budding bullish momentum to sustain itself and reverse the broader downtrend. Zooming into the 1-hour chart, let's examine the more recent price action that led up to the strong daily close on August 13th. The hourly data available, specifically from July 25th to July 30th, 2025, provides insights into a period of pronounced weakness for the pair. During this window, the price declined notably from highs around 0.658 on July 25th to touch significant lows near 0.645 by July 30th, aligning perfectly with the daily candle's low for that date. This short-term bearish phase on the hourly chart corresponds to a temporary correction within the broader context of the daily chart's movements. It's important to understand that this hourly data represents a prior short-term dip, highlighting the volatility preceding the more recent August 13th rally. The swift recovery observed subsequently on the daily chart suggests that this specific hourly downtrend was a temporary correction within a larger, more recent upward trajectory. This earlier dip also established a relevant short-term support zone around the 0.645 level, which can serve as a historical reference point for future price action. Now, let's get even more granular with the 15-minute chart, focusing on the most immediate price action that culminated in yesterday's strong close, specifically from August 12th to August 13th, 2025. On August 12th, after an early dip, we witnessed a solid rebound throughout the day, pushing the price firmly into the 0.652 to 0.653 range, indicating strong intraday buying interest. The true bullish momentum became unmistakably evident on August 13th, as the price, starting near 0.6526, consistently climbed with impressive vigor. This persistent ascent culminated in the 0.65506 close we observed on the daily chart, signifying a clear upward trend. This rapid, Short-term bullish push on the 15-minute timeframe strongly validates the minor bullish trend line mentioned in some news analyses, confirming the recent upward bias in real time. It's interesting to note that one news source suggested a short-term sell order for August 15th at 0.64963, which, if current upward momentum persists, might see that price level challenged for a bearish entry. Observing the volume accompanying these moves is vital. Consistent buying volume on these shorter timeframes adds conviction to the bullish narrative. Traders should pay close attention to the intraday highs and lows to identify potential immediate support and resistance points. So, based on our comprehensive analysis, what are the compelling reasons to be bullish or bearish on AUDUSD, considering both short and long-term horizons? Bullish arguments are strongly underpinned by the recent resurgence in Australian jobs data, providing fundamental support to the Aussie dollar. The visible short-term bullish trend line, confirmed across the 15-minute and daily charts, suggests an ongoing upward trajectory. If the pair can decisively breach the immediate overhead resistance around 0.656 to 0.657 with sustained buying volume, there's significant potential for a move towards the 0.660 to 0.665 zone in the short to medium term. A confirmed break and hold above 0.665 could then signal a more robust long-term recovery, potentially targeting the prior highs around 0.675, especially if global risk appetite continues to improve and the US dollar faces broader weakness. On the bearish side, the overarching long-term trend from the September 2024 peak near 0.690 remains downward, indicating that any rallies could be opportunities for sellers to re-enter. The mixed signals from U.S. inflation data and President Trump's comments could trigger unexpected U.S. dollar strength if the Federal Reserve is perceived to maintain a hawkish stance. A failure by AUDUSD to hold above the immediate support at 0.650 to 0.651, especially if coupled with a reversal in positive Australian economic sentiment or a surge in U.S. yields, could see the pair retesting the critical 0.640 support level established in prior dips. A decisive breakdown below 0.640 would open the door for a retest of the crucial long-term floor around 0.601, indicating significant renewed bearish pressure. Traders should monitor not just price, but also the volume profile. High volume on a breakout or breakdown provides stronger conviction for the move, while low volume could indicate a false signal or weak momentum. To recap our analysis, the important price levels to watch for AUDUSD are, on the upside, immediate resistance at 0.656 to 0.657, followed by the more significant 0.660 to 0.665 zone, and then the critical 0.675 to 0.679 area. On the downside, key support levels are established at 0.650 to 0.651, then 0.640, with the crucial long-term floor at 0.601. We predict a bullish continuation in the short term, with a 60% likelihood, provided the pair holds firmly above 0.651 and successfully breaks through the 0.656 to 0.657 resistance. This scenario would be strongly reinforced by continued positive Australian economic data and, crucially, if the US dollar shows signs of weakness. However, a bearish reversal holds a 40% likelihood, particularly if the 0.650 support is decisively breached, intensified by stronger than expected U.S. economic data or a more hawkish tone from the Federal Reserve. Beyond technical levels, keep a close eye on upcoming economic reports, especially from the U.S. and Australia, as well as shifts in global risk sentiment, which will heavily influence this pair's direction. Always remember to manage your risk effectively, and thank you for watching Explain the Charts. We'll be back soon with another in-depth market breakdown.